Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q4 H2 and FY'26 post-earnings conference call of Ollie Technologies Limited. Today on the call from the management team, we have with us Dr. Ajay Mia, Managing Director, Mr. Rajiv Tyagi, Executive Director, Ms. Ritu, Executive Director, Mr. Sandeep Jain, Chief Financial Officer, and Mr. Sandeep Salman, Head Cloud and Managed Services. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the investor presentation for the period ended March 2026, the business performance highlights and the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you very much, Vinay, and thanks everyone who has joined the call. I will try to run through the slide deck quickly so that we have time for whatever conversation we have. The deck was uploaded on the NSE site yesterday, and I guess at least some of you might have had taken a look at it already. So this has been a transitional year for us. And we have used this period basically to build scale, prepare ourselves for things which are needed as we see the technology and the overall IT ecosystem changing the worldwide. So we'll go through some of that tale of what has changed and what have we been doing about it. So this has been a soft operating year, but the foundation is strong. Alletec is a profitable, debt-free, cash-rich business, and we have chosen to invest during this period when the demand cycle from the customers has been cautious. The fundamentals that protect the shareholders' capital remain intact. We generated 26.1 crores of cash from operations, which was a PAT margin of 17.2%. The balance sheet, as you would know, is fairly strong. We have cash of almost 163 crores, cash and investment, and we are practically debt-free. The net worth, the shareholders' fund, they moved up by 17% to now 169 crores, and we invested in business development activities and building AI capabilities. So the dip that we see is not because of a lost competitiveness or because of demand, but a lot of other things have played a role in whatever the year has been. We have experienced, so this 26 anyway was not a business as usual year. And we experienced shifting global trade dynamics, which started from the beginning of 25. Geopolitical conflicts and the fastest technology shift that we have experienced over the last more than a year now, and they all caused customers to hesitate. We are a leading indicator. Whatever happens in the market, we get to see it very quickly because we work directly with the end customers. So we experience and absorb the macro stress that the markets show. And this basically was a period when we saw buyers took cover. The mid-market customers across several regions became cautious and they deferred new commitments. With all the changes that were happening in the technology, people were less sure of whether they were buying the right product, they were buying the right solutions. So the unprecedented pace of this technology shift basically meant that the decision cycles were longer. The hesitation lengthened the evaluation and approvals. And the costlier pre-sales basically also impacted. It always has dual impact. It basically means that you are spending more time selling and you are investing more. You have more demos and you have more POCs to do. And all of these things came together to the year that we just ended in March 26. So our response to that has been that we have been working to align ourselves with the market shift. We have been making deliberate efforts to move up the market. So more focus going and more time and energy going in engaging with larger customers. They have been enhanced focus on larger accounts who bring higher revenue and would last several years over time. We have strengthened our data and AI solutions. This is both in terms of building proprietary IP and overall capability of our teams in this area. So this is how we have responded to whatever changes were happening in the market. If you look at Alletec's overall positioning, we are diversified by geography and capability. India, incidentally, during this period, we had growth in this area, although the overall numbers show a slight decline. But India had a growth in the enterprise modernization and the mid-market Dynamics 365 adoption. The Middle East and Africa, Middle East obviously is very, very new for us, but it has started locking customers in, and we saw the traction in this market strengthening after several quarters of effort. Incidentally, Africa is turning again this quarter, and we expect some significant closures happening this month. The Americas, we have been consolidating. The one good thing in Americas is that we now have a critical mass of customers there. So we are, instead of focusing just on, when I say Americas, I'm talking of the US and Canada together. We are trying to shift focus from very small customers to larger sized accounts. Europe and APAC, we go a little bit more in an opportunistic manner. So our efforts in that have been a little bit measured. And when we go to these customers, we go with the entire capability stack, which includes the ERP, CRM, Power Platform from Microsoft. It includes data engineering, data governance, and business intelligence. The entire AI stack, which includes the agentic automation, the other AI capabilities that these product lines have, and building the enterprise intelligence layers. Azure infra and security solutions have become very important this quarter, and we are seeing a good traction on that front as well. So put all of this together, we clearly see this year being significantly better than the year that went by, assuming that there are no other global level macro shocks that come along. So what is our level of readiness, and why do we think that Alletec can scale? Our existing foundation, we now have more than 300 active customers. These include the customers we have had in the past, the customers that we added in the last year, and there is some churn that anyway would happen, but we still have more than 300 plus active customers. Our multi-country presence, we are very focused on Microsoft, so we really specialize in their offerings, and Microsoft is doing well, so which is a good news. We have a strong balance sheet, and we have a high customer retention. The scaling drivers for us would be more energies being put on the larger deal size. Our revenues would be increasingly driven by IP. And just to clarify, when I say that, it does not mean that we are an IP-focused solution provider, but IPs form a critical element of many of our projects because our industry solutions would be built around those IPs, which are then adapted by the customers. In several geographies, we now have a critical mass, be it the US, Canada, and India, of course, and Africa is building up. We are very excited about what's happening in that market today. And data and AI cross-sell is pitched to most customers, which are above a certain size, and we are seeing good traction there. And of course, M&A remains on our agenda. And all of these things together will be the driving factors, and this is why we have the conviction that Alletec will scale. The other thing that happened, since we spoke last, we now have all the 6 Microsoft Solution Partner designations. So this is where our skilling, our training, our certifications, they came in. And they also, these Solution Partner designations also mean that we did the revenues that are needed for earning these badges. These are the 6 designations that Microsoft offers, and we now have all of these 6. Not many partners, globally would have all the 6. One very important question that every investor, shareholder obviously has in mind is that we have significant amount of cash sitting out there, over 160 crores. So what are we going to do? Our current priorities, of course, are so first of all, as I mentioned there, the balance sheet is not idle. It's an optionality for us, which basically means that we maintain strategic flexibility. We are going to ensure that we bring returns to the shareholders. We are going to pursue value accretive acquisitions, at the same time preserve balance sheet strength and continue with capability investments. The capability expansion basically would continue. The focus is on data engineering and AI talent, and of course, the IP that we are building around it, in our geographic reach, and in disciplined structuring, be it the earnout led or retention log deals that protect the downside. What we will not do is that we will not pursue acquisitions at unrealistic valuations, and we are not going to deploy cash merely to demonstrate activity. Our midterm goal is looking at 500 crores, and the building blocks are going to be the core ERP and CRM growth. And I think this is a very important point for all of us to understand well. There is big momentum on AI. The products are changing. All the products, including the Microsoft ERP, CRM products, are getting powered with more AI. But then all these products also require data, which AI will work on. And this data comes from the systems that we have been deploying for over 2 decades. That's the core ERP. So the momentum there is increasing. The products are getting modernized, and customers are looking at getting modernized with those new products increasingly. Our international expansion, our data and AI practice growth, customer expansion, and selective acquisitions are going to be the building blocks. So by the way, this 500 crores is a midterm goal. It's not a guidance. And we believe that this is achievable over midterm and requires both organic and inorganic growth. We are looking at mainboard migration. It's on. We haven't yet taken that decision in the board meeting, but this is something which will come up for conversation shortly. And based on the suggestions and recommendations of the entire board, including the independent directors and the key management here, we will take that call in the coming few months, perhaps. The numbers, maybe some of you have already seen these. But if I was to look at our annual numbers, we did a revenue of 137.87 crores, which was probably like 1% less than last year. The total income from operations, however, stood at 149.59, which was just a little bit more than last year. The EBITDA and margins were at 36.3 crores, and it was 24.3%. The reported net profit and margins, 25.7 crores, which is 17.2%. The adjusted net profit and margins, 27.1 crore, which is 18.1%. Repeat and recurring revenue was 90.6%. We added 35 new customers, and the team size remains at about 350. A dividend of 1.5 rupees per equity share has been recommended by the board, and we expect this will go through. The geographic spread has been in this fashion. The Americas and this is only from the services point of view. The Americas constitutes the highest percentage of services, followed by India, and then APAC, Middle East, Europe, Africa. We expect will grow significantly, from the next quarter onwards because of some of the deals that we are on the verge of signing in this region. If you look at the total revenue, including the license and services, then the India gave us 46% of the total revenue, sorry, 43.5% total revenue. And we had approximately the rest of it came from the international business. From a customer engagement point of view, you will see that, from the top 5 and top 10 customers, we have had 21.8% and 29.8% revenue. And the new customers that were added were a total of 35. By the way, one interesting data that I would like to share with you here, which is not mentioned on the slide, is that while the total revenue from the top 5 customers has been shown as 21.8%, this is for the entire year. And because of the headwinds that we spoke of, we were facing, this percentage for the last quarter was higher. The conflict that was happening in our neighborhood had a significant impact on many decisions, halting. And we expect that in the coming quarter, and some of it in this quarter, will get cleared up. These are the industries served. The same set of industries that we had last year. Professional services is at the top with 35%, followed by manufacturing, EPC, retail, and the rest of them. While this is in the category of what has not changed, what has not changed is that we have been doing Microsoft Business Applications for all these years. We have had 7 at least inner circle badges over this period of time, more than 1,100 projects done, a team of 350. But even in this slide, all these new solution partner designations that we now have add strength to whatever we have been doing in the past. Now, this is important. The reason this is important is because increasingly more and more customers like to partner with companies who have the ability to leverage the entire technology stack to deliver a solution. And not just somebody who's an ERP, and not just somebody who does just Azure. So the ability to look at, understand all the entire technology stack, understand all these solutions, and stitch a solution which brings the best of what is needed is very important. And customers do therefore look for partners who have the capability across the entire solution areas. These are the broad areas that we have been working on, and there's an existing slide from the last quarter also, which includes digital code modernization, enterprise applications, process optimization, system integration, data and AI, and change management. The entire stack, and of course, all the components of this stack keep changing, very quickly, with AI and agents getting embedded in them at such a rapid pace. The board of directors, the lead management, and then these statements which you probably would already have access to. So I wouldn't read that. This is our CSR. So I will stop here.
Thank you, sir, for your detailed presentation. All those who wish to ask a question may use the option of raise hand. In case you are unable to raise hand, just drop a message on a Q&A box. We'll take the first question from Sandesh Kumar. Sandesh, you can go ahead.
Yes, sir. Can you hear me?
Yes, I can hear you, Sandesh.
Sir, we have been talking about AI since 2 years, and we are transitioning from solution partner to AI first modernization center. We have been deploying AI agents for our internal process, resulting in reducing man hours, and we are embedding AI agents to our IPs, resulting operational savings for clients. We are already scaling Microsoft Fabric as an unified data foundation for SME and mid-market solutions. Given that these are the exact technical pillars like agentic architectization, data modernization, for to get the frontier partner badge from Microsoft. Recently, many global peers got the award, and even some small company like Coimbatore-based company got the award. Like when we can
I
get
will. Yeah. So you see, Microsoft also has, in some of the badges, they also have a certain amount of a certain volume of transactions
yeah.
that you do, certain volume of licenses that you sell. I'm not so sure, but I think for being a frontier partner, and eventually we will become, in couple of quarters. I think they had a need of selling 1,000 seats of certain products, co-pilots or agents. They needed 1,000 seats. I think maybe Sandeep Salman has more
seats. Copilot, M365 Copilot.
So they basically needed 1,000 seats of M365 Copilot to be sold. We have everything else, but we do not have 1,000 seats of M365 Copilot sold. And that's the reason that we don't have that yet. But I'm sure we'll have it. We'll get there sometime during the year.
So, can we do E7 migration without this frontier suite?
Can we do E7 migration without this frontier?
Yes, sir. Yes.
Sandeep?
Yeah. Can you hear me?
Yeah, yes, sir.
Yeah, migration is one part, but you can always sell the new licenses of E7. However, if you have to migrate your existing customers from ME5 to ME7, then you need to be a frontier partner. But you can always sell new licenses of ME7 to customers.
Okay, sir. So when we can expect this frontier partner?
My guess is it'll happen sometime during the year. I think we'll be happy to update you as in the coming months as things progress. We have a couple of hundred there, but I think we have some distance to cover to get to a number of 1,000.
Okay, sir. My next question is on our IPs. Our IPs like Travel 365 and others were built like pre-Gen AI era. Now the Microsoft is natively rolling out agentic capabilities, Copilot Studio, and now this E7. This AI is becoming highly capable, especially is our proprietary IPs upgraded to handle this Microsoft AI agents natively. Consider this scenario. Think like I'm a client sitting out on Bangalore using Dynamic 365 along with our Travel 365 IP. Can I use simply Microsoft Copilot to perform actions such as like booking a hotel in Mumbai? So this Copilot should use Work IQ to check my who I am, my travel policy, my designation eligibility. So it should talk with multiple agents with multiple location and should check with the Travel 365 backend and can do this type of work.
So I will ask Rajiv to respond to that. But before I do that, I would also like to clarify that to really get an answer to that question, you will have to understand what Travel 365 solution is for. So Travel 365 solution is not a portal for end users. Travel 365 solution is a solution for travel agencies and for businesses who are providing travel services. This is a solution which will be used by their mid office and back office. This is not their portal which is used by the end users. Over to you, Rajiv.
Yeah. So Sandesh, regarding Dynamics 365, whatever copilots have been embedded in the product, they natively get used by our solution also because our solution is an extension built on the same platform. So we don't have to, the only thing that we have to realign is certain workflows, what now is possible to do through the agent. In addition to that, for all our vertical solutions, we are also bringing our own additional agents and intelligence layer to make these solutions, become more modern and AI empowered. So in addition to what Microsoft is releasing, we are also putting extra AI capabilities in our solution.
Okay, sir. I think so our IPs are deeply integrated to current environment. So it's like
Correct.
nothing become absolute in AI era.
No, not at all. It will only become more powerful.
Yeah, okay, sir. So what type of investment we are doing in AI? Like earlier in last PPT, they showed 10% of revenue is coming from AI and data. So what type of work and what type of investment we are doing, especially with AI?
So we are doing two kind of things. One is that, besides modernizing these solutions with the specific point agents which will do certain functionality, we are also investing in building a generic intelligence layer which sits on Microsoft Fabric. And with all our, so this will open up an opportunity where not only for all the new customers we position this, all our existing, that 300 plus customer base becomes a farming ground for this. And we have already started reaching out to all the customers. We have also converted, 3 customers. We see now there is an inflection point where the customers are seriously talking about AI and are, taking it to the production level. So the investment is going in building this intelligence layer and data and AI. So enabling all these AI capabilities in a customer, there is a level of change management. So every customer will start small. They'll try to pick up few use cases, develop that complete AI, awareness within the organization. So which is what happens and what is happening with a lot of customers now.
Okay, sir. Okay, sir. My last question is on our aspiration in African continent were very big. We almost had 20 years of association with Africa. In fact, we had our first client from Africa. Earlier, we developed one product like Baffins, it's by Microsoft itself. Now, and we established on subsidiary Alletec ERC during Jan 2023. It's almost 3 years. Earlier, we had revenue 8 to 10% from African continent. Now it's reduced to less than 4%. What is the reason for this, sir? Is any local competition from there?
No, it is not local competition. Ritu, you want to do that? You want to take that?
Yes, yes. So in the African region, what we have seen is the sales cycle itself is different in Africa vis-a-vis the other geographies, right? What we have experienced in the last at least 2.5 years is that if we have to sign a deal, say in India or in US, it will take, say, about double the time, at least double in Africa, right? And the other element that has compounded it is our migration from the small and very small businesses to the larger customer bases where the decision making takes longer. But having said that, we are right now at a point where in this month and in the coming year, Africa is going to grow immensely.
Can we reach earlier revenue percentage 8 to 10%?
We guess so because we have good pipeline there, and we are at almost contracting stage on a couple of customers. The other one thing that you need to understand about Africa is that some regions of Africa also had very deep currency crisis. For example, Nigeria has been a very important market for us. We had some large customer there. But then it fell into a deep currency crisis with the naira versus dollar rate changing so dramatically that we had to kind of pull back a little bit from there. So this has been a situation again for at least 2 years there. But I think things are now stabilizing significantly. And we are pretty excited about what we are currently involved with in Africa.
Okay, sir. Thank you. Thanks for answering my all questions. Thank you, sir.
Sandesh, sir, we'll take the next question from Pratik Shetty. Pratik, you can go ahead, please. Pratik, you are audible. Yeah.
Am I audible now?
Yes, Pratik.
Hello. Thanks for taking my question. So I hope you're doing well.
Absolutely.
My first question is around the growth. So can you, for the quarter and for the year, give us the constant currency growth numbers or degrowth, whatever it was, on a constant currency term?
I do not have that number handy with me, but you can possibly compute that from the financials that have been published. But if you have any additional questions, please feel free to write back, and Sandeep or our investor relations team will respond.
Sorry, sir. And can you give a split of the product versus services revenue also within the product? How much was IP-led products for in the weightage?
Yeah, absolutely. Our license business was approximately 44%, and our services business was about 56%. And our IP. See, the thing is that you have to understand, sometimes looking at the number or the value of our IP is very misleading. It becomes misleading because these are not off-the-shelf products. Many a times our IP becomes the catalyst which enables us to sell an entire project. It could be, by its very inherent value, it could be maybe only 5%. But then if that 5% wasn't there, we wouldn't probably win the project itself. But then,
Okay.
so for example, in the travel segment, our IP on the travel segment, if we didn't have it, we wouldn't sell anything on travel. Similarly, in education, if we don't have it, we wouldn't sell anything in education. So the same thing is true about, be it EPC or be it BAPENs or be it, a couple of other solutions that we have. So the number of the value of IP itself, and even if I mention this to you, it'll probably be about somewhere between 5 to 7% of the total product. But this number would be misleading if you try to gauge from it the impact it is having on the business.
Got it. So it's more like foot in the door kind of a product for us.
It's not a foot in the door. It's a primary driver.
It helps us get the.
It gives us the seat on the table.
Yeah, got it.
Because this IP demonstrates our understanding of the domain of the industry. It demonstrates our ability to solve the problems of the industry, and it demonstrates our hold on the product and the technology stack.
Got it.
Just Ajay, like just to add one thing that this year deliberately we are restructuring the pricing and positioning of the IPs. We have created different bundles, and we expect that this whole IP thing should reach to a 10% level of the licenses. So we are trying to, with a very focused approach, trying to increase the share of the IP in each of the deal.
Okay. So next, I'm trying to reconcile some data points. So basically, we had decent customer additions this year. We have 300 plus active clients. Microsoft reported for the dynamic product portfolio every quarter more than 20% year-on-year growth. So my understanding is this should be the anchor point for our growth as well. But why is there a dichotomy? Like, is it because in spite of all the macro headwinds that you mentioned, Microsoft is able to grow this product by 20% every year, like quarter on quarter every year. So why is it that we are not getting the tailwind from it? So why are we not benefiting from it? Is it the customer segment that we target versus where Microsoft is booking the revenue from, or is it something else?
Well, one aspect of this definitely is that a lot of the revenue that Microsoft is talking about is from very, very large businesses. And sometimes in those cases, Microsoft does the licensing, directly, sometimes as a pass-through with some very large account resellers. So that is where you see the growth from. But overall, the momentum has been increasing. we may not appear to have gained from it this year, but this momentum is definitely going to be a tailwind for us to give us more momentum in the market. So that is the reason why we said that some of these numbers may not. You see, if you look at some regions globally, they were not as impacted by whatever was happening during the year. The mid-market segment was impacted more. Particularly after the recent conflict, certainly the Middle East got kind of paralyzed, and a lot of things kind of stalled. So the impact of this has been very varied across regions and across customer segments. But that Microsoft has been having good growth is only good news for us because we play in exactly the same market. And yes, we have added a decent number of customers, but this number of customers has been lower than last year. We also had, as I said, our percentage revenue from existing customers, the top 5, top 10 in Q4 was significantly higher than what it has typically been, what it was for the entire year. And this kind of is just a data point that shows the impact of whatever was going on. But we are so excited that the overall market is reacting very well to what Microsoft is doing, and we will end up gaining because of that momentum.
Okay, just to understand this year's performance again. So, is it like the average revenue that we are booking per client has gone down? Like mathematically, it has gone down, but in general, per client revenue has decreased, or is the impact because of us losing some large clients? And was there a churn that?
No, I think the biggest reason was that something which normally we would have closed in, let's say, in a matter of 4 months, 3, 4 months, 5 months, 6 months, just continued to drag on. So, for example, some of the deals that I mentioned are in a contracting stage, and we expect them to happen this month, have been going on like for close to a year, close to 9 months. Normally, this would have happened in 4 to 6 months' time, and we would have booked some revenue from that, which did not happen.
Okay. Got it. And lastly, sir, your aspiration for 500 crores. So what is medium term here? Like how many years would be medium term for?
Well, I would guess anywhere 4 to 5 years is medium term. And ask me, do I have a reason to say that? No, I don't. But that's what we would like to see happening.
Okay, sir. Those are all my questions. Thank you for answering them.
Thank you.
Thanks, Pratik. Participants, please limit their questions to 2. We'll take the next question from Mayank Agarwal. Mayank, you can go ahead, please.
I hope I'm audible.
Yes, Mayank.
Yeah, hi. Thank you for the opportunity. I had one question. Like in H1, you had indicated towards a normalization in business condition towards the end of this year, which is FY'26. But the performance appears to be have weakened further. So what has I know there was some delay in the decision making and all the macro condition which has impacted the overall sales performance. So can you give more colors on that, and what is your current outlook further?
Well, there isn't more that I need to add, because whatever has been happening, I gave the 3 reasons, that have seen us, not grow on the sales side. And, whatever has been happening, particularly in our part of the world, is known. Some things have aggravated in the last quarter, in the last 3, 4 months. That has paralyzed businesses in some countries. And when people have to make investments that look, discretionary at some point in time, they took longer to take that decision because there has to be enough conviction that businesses are going to return to business as usual. When that does not happen, people, look at saving cash.
Yeah. So if you have to comment on the current scenario, so what you can say that?
Well, if you tell me what's going to happen around Hormuz with certainty, I will be able to respond to this question with certainty.
Got it. Okay. Like one more question on the margin decline. So what were the main reason in the steep fall in the margin in this quarter?
So really, operationally speaking, there wasn't any steep fall. Obviously, when sales goes longer, your cost of sales goes up. You know, if you are engaged somewhere, instead of 3-4 months, you are engaged for 9 to 12 months, you end up investing more, not just time, not just money, but also mind share and time of some of the senior management team, and that brings an impact on the overall costs. But then there were other elements. We had this one-time cost of, I think, 1.3 or 1.4 crores, which went towards all the the changes that government brought in for PF and so on, those adjustments. Then we had some additional new business development costs that were booked in this quarter, which included some travel, and it included some participation in some exhibitions and so on. So some of those bills, kind of came in at this point in time, and they were all booked. There was nothing really, extraordinary about it.
Okay. Thank you so much. That was.
Thank you.
Thank you, Mike. We'll take the next question from Surinder Singh. Surinder, you can go ahead, please.
Hi, sir. I hope I am audible.
Yes, Surinder.
Yeah. So thank you for the opportunity, sir. First and foremost, thank you for the excellent investor presentation.
Your voice is breaking. I can't hear you clearly.
Hold on. Yeah. All right now?
Well, I can try.
Oh, okay. So thank you for the investor presentation. It was really, really nice. I like both the content and the tone. I'm a SEBI registered independent research analyst, and I run a stock advisory service by the name My Equity Sherpa. I have 3 topics on which I would like to know your views. First and foremost is this larger deal size we are targeting. What are the gaps we have built in the last 2 or 3 years, which makes us eligible for such deals now going?
Wait a minute. Can somebody repeat this question for me? He's talking about large deal sizes, and what is it?
Shall I try again?
Yes, please.
Yeah. So large.
Surinder, can you move away from the speaker and talk into the device? Yeah.
Is it better now?
Do you want to put your question in chat? I will respond.
Yeah, I'll do that.
Sure.
Okay, thank you.
Sir, we'll move on to Rishabh Joshi. Rishabh, you can go ahead, please.
No, wait. I guess we wait. We give him a minute. It's not nice.
So let's take the next question. When he puts the question in chat, we'll take up this question.
Okay.
Hi, sir. Hope you're well. Thanks for taking my question.
Hi, Rishabh. Thank you.
I wanted some qualitative assessments from your end. So we know that 26 was a consolidating year. Can you throw some light on how deal flow is kind of shaping up in Q1 and FY'27? Are the sales cycles continuing to be long? Can we expect some of the extended conversions from last year to convert? Like you said, you have some in contracting phase already. So some kind of qualitative texture on how FY'27 would shape up relative to FY'26 or even FY'25.
Absolutely. So as I said, some of the deals that are in the contractual stage and which we hope to conclude this month have been deals that we have been working on for anywhere between 9 to 12 months. Under normal situations, they should have closed anytime around October, if not before, of last year. But with everything that was going on, it did not happen. But now it's happening. Unless there is a big surprise, we see no reason that we should not end, this month with a good order book for new business. So I would say that, if we look at the momentum is there. It's very encouraging because customers are now asking not just for an enterprise application. They are not asking just for ERP, not just for CRM. And everybody knows that these are the systems which are the foundation for generating the data that ultimately goes and feeds their AI applications. And they need to make their organizations AI enabled. So the overall ask from customers, the spectrum of that is becoming broader. We as an organization are gearing up to address those needs. We are finding customers engaging with us on a broader scope. So these are really, really exciting times. I'm sure that we will leverage this and we will have very exciting business traction for the rest of the year.
Sir, that's promising to hear. So does that mean that would translate into numerical growth for FY'27 quickly?
Yeah, of course. I mean, we still don't have, let's say the Middle East deal signed between the two nations. We still don't have some other things addressed. We don't know, what happens to Hormuz, and we do not know what will happen to other things that are going on in the world. But, assuming that we don't have any of those things impacting, as I said, I wouldn't be surprised if, in this month itself, we sign a new order book worth maybe $1 million across all solution areas put together. Be it ERP or CRM and AI and Azure. So that's likely to happen. Now, that does not mean that we will have that happening every month or every other month. But if we are doing that this month, this is all something that we have been working on, for the last close to 9 to 12 months. So some of these things, they also bring momentum. They help you to build the muscle to do more. So as I said, these are exciting times.
Thank you, sir. That's exciting to hear. Second question was on the capital allocation part, which you briefly touched upon on the deck as well. So we are, of course, incrementally adding to our cash balances on a year-on-year basis. And now it's been close to 3 years that we have not really, been able to find the type of acquisition that we would ideally like to make based on your parameters and, the prudence in which you are carrying along. So, sir, the question is, going forward, this is going to continue to accumulate. So do we have a defined plan, or are we, clear of what we are trying to acquire, whether it is a sales capability, tech capability, or what it is exactly, and some defined timelines? And if not, is there a way maybe we can give it some amount of that surplus annual capital that is being generated back in the form of a buyback or some form of a, higher dividend?
All of this will be, put on table with the board, in the coming weeks. Once we have some decision on this, we will be happy to intimate. But there are some conversations on the acquisition front. Some look at an advanced stage, but it's like one of those things. It's 0 or 1. So unless it happens, it has not happened. But we are squarely aware of this situation and fairly sensitive about it.
Got it, sir. So we don't think we can actually build, instead of, if you're not able to find acquisitions, that whether we can actually spend on building that capability organically.
That we are already doing.
So do we have an expectation of how much we are intending to spend on this in this coming year?
Well, it's going to be some serious money, because some of the buildup that we are doing is expensive. So that way I have probably pre-answered a question that you might ask me in one of the future calls, that why has the expense gone up? So some of that expense is going up in this area.
But sir, to be honest, I mean, as a long-term investor, it's very heartening to hear that, because the biggest bane has actually been the idle cash. So if it's not being deployed, even if externally, if you are able to use it,
you will see that happen this year.
Build out capabilities. That is also very heartening to hear.
You will see that happen this year.
Okay, that's fantastic, sir. I wish you all the very best.
Thank you very much. Thanks for being with us.
Thank you.
Yeah.
Sir, Surinder has put his questions in the Q&A box, if you can answer them.
Okay, 1 minute.
His first question is, what are the gaps we have bridged in the last 2 to 3 years to make us a compelling vendor for large deal sizes?
I don't see. Is it in chat or where is it?
No, there's a Q&A box separate.
New box.
Yeah.
Okay.
What are the gaps we have bridged? His first
Yeah.
question.
Wait a minute. Yeah, I'm opening it.
His first question has by mistake moved
How
to
our
answered.
thinking has evolved.
No. The first question has moved to answered by mistake. What are the gaps we have bridged in the last 2 to 3 years to make us a compelling vendor for large deal sizes?
Okay, got it. So I think one of the most important things is that we are no longer seen as purely an ERP provider. And for quite some time, we are now a provider of solutions that comprise of the entire stack. If you look at some of our, let's say, as an example, we have some sizable customers, let's say in Canada. And for those customers, we are doing kind of everything. It includes the ERP and the CRM and data engineering and some AI work. And so there is so much that we do. So, for example, this customer that I am referring to, he's going to spend with us at least $3 million over 3 years. And he wouldn't have done that. And at the moment, we are his primary, solution provider. He wouldn't have done that. He wouldn't have engaged with us if we didn't have the ability to do that. So one, we have created a separate, we have assigned a couple of people internally just to work on large accounts. And these are obviously people who have the consulting and solutioning ability, and they engage with a small number of identified customers, from a consulting side. So it's not a sales engine. So when you engage in these accounts, we don't see this, as a revenue event. We are looking at a revenue annuity. So I think there's a very different approach to these sizable accounts, and we are trying to change our approach of handling the SMB, in one way, and our large accounts in a very different way. So the answer to your question is, from the point of view of our status as a solution provider, our capabilities in terms of the products and in terms of the solution areas, and then also a little bit in terms of our how we are structuring ourselves. And by the way, I must also say that we are not done. We have started doing it. It does require a significant amount of push and energy and bandwidth investment, but we are going to do it. So second question is how our thinking has evolved on acquisition approach after spending 3 years actively with a strong balance sheet. Compared to earlier times. So I think I answered this question. So unless there is something that you think additionally I need to say, but you are saying target size, valuation aspects. So valuations have obviously changed, over the last 6 months. Some of the multiples that we were looking at earlier have only come down over this period of time. Our target size remains, businesses which are ballpark in the range of $5 to $10 million. Higher, the better. Question 3 is midterm goal. How much percentage expected from inorganic route? I think this question 3 is related to question 2 in some sense, but my guess would be that the inorganic will probably comprise of somewhere between 30 to 40% of this number.
Okay. Sir, we'll take the next question from Sayan Dev. Sayan, you can go ahead, please.
Yeah, am I audible?
Yes, Sayan.
Yeah, thank you, sir, for taking my question. So I have two questions. As you can see, the margins has decreased for the quarter. So what is the margin guidance for the next few quarters? And the second question is the recurring revenue rate for the quarter was 85%, but the average for the year was 90% plus, right? So is the recurring revenue decreasing? These are my two questions. Thank you, sir.
No, see, none of these are indication of any trend. We had as I already mentioned, our Q4 revenue from from existing customers was actually, and some of these numbers that you see, you have to break what is services and what is license. But there isn't any clear trend if you look at an annual basis to say that whether the recurring is growing or there's no. There may be small I would say turns that you may see a graph taking on a quarter by quarter basis, but broadly speaking, nothing has fundamentally changed. And I was just answering that question on profitability. And as I said, our profitability has not had any significant impact other than that there has been this one-time cost of about 1.4 crores towards the government recommended PF provisions that we had to make. And at the same time, we had some business development costs which were towards travel and towards participation in some exhibitions and so on. There is, of course, some increase in the overall cost of people. The overall employee cost and technical people cost has gone up slightly by about 5%. But because we did not see, and which is natural, that will happen. But this probably wouldn't have been there if some of the deals that we have been talking about, because we invested in the pre-sales of that deal. So if those deals would have closed in the October-December quarter or January-March quarter, then you would have seen the same percentages as you have seen before.
Okay, so sir, can we expect the margin to increase from this point on?
Well, I don't want to answer that question because at the moment, our focus is to see that how does the business scale? And just to show that we are increasing our margin, we don't want to compromise on the scalability of the organization. Now, this may happen, but I don't have anything specific that I would say I am doing to increase the margin. Right? We have the same levers that we work on. The outcome of what we do varies from quarter to quarter. We are working on increasing our international business. We are working on increasing our revenue from our IP. And we will continue to do that. Now, depending on how much of it shows up in a quarter does impact the margins that you will see. Because it's not like, in a manufacturing business, we will say that, okay, now we are getting our raw material from a lower cost source, and therefore our margin will become more. We still keep doing the same things. And we just want to increase the intensity with which we are doing those things. We don't have a mechanism that we don't have a lever that we will turn to say that now this cost has come down. And in fact, some of that cost may go up. On one hand, when we are trying to attract and keep high-skilled people, they will have a cost. We don't want to not keep it simply because we want to show a higher margin. So we think that the scalability of the organization is very important. Scalability of business is important. We will bring these people in. It may impact the cost in a short term, but ultimately it will bring us to a point where we will have healthier, bigger balance sheets and P&L.
Okay, sir. Thank you for answering my questions. Good luck to you and the management.
Thank you very much.
Thanks, Sayan. Sir, we'll take the next question from Umang Shah. Umang, you can go ahead, please.
Hi, am I audible?
Yes, Umang.
Hi, thank you for taking my questions. First question was, we have a large shareholder called Sarita Kapoor, and her name appears in the prospectus also. So is she someone from the company?
No, she is not. She, however, has a history. She invested in the company way back in 2006.
Okay,
And, those were early days for us. And they have
okay.
just chosen to stay with the company.
Oh, lovely. Got it. Got it. That is one question. Second is, because we run a work from home kind of an environment for all of our employees, just wanted to understand how are we going about training for the AI-driven training for all of the employees? Are we training them only on Copilot or on Claude and other LLM models also?
Rajiv, you want to take that?
Restricted to just Copilot. And in fact, just to let you know that Microsoft GitHub Copilot, they allow you to use whether you want to use whatever LLM, it be it ChatGPT or Claude. So that's a choice that we can make when we are using these copilots. So it
Got
is
it.
just not restricted to Microsoft.
Got it. Got it. And last question was, because of the use of AI, are we seeing any efficiencies in our employee productivity? And if yes, can you quantify it? And related to this, what is the hiring plan for next 1 year?
So we obviously are seeing, efficiency gains, but at the same time, it has not become to the level where, it is becoming so easy to measure on a quantitative basis. I think there is still time for us to get to that level. Right now, what is happening is that the quality of the code, certain processes that were not happening previously in terms of rigorous reviews and whatnot, they are now getting addressed through the, AI. So you don't have to have those people, and that competence is being utilized through the Copilot. Because we also work more on the packaged software. So it is not that we are just into the full-blown software development activity only. So
Got it.
we get into a lot of consulting kind of a area as well, whether it is training, configuration, and whatnot. So in the coding side, we are gaining efficiency in every aspect. But as I said, I think it will take more time, maybe another 6 months, where we will be able to quantify exact gains. We have also kind of remodeled our implementation approach methodology that has also now got redefined with agents. What will the agent do? What the human in the loop will do? So all that is what is currently getting transitioned. So I'll say it's a bit early to have the quantitative numbers.
So
Great, sir.
one
Yes,
more thing,
sir.
Umang, which I would like to add here is it's important to understand many of our people have stopped writing code manually.
Right.
Okay. But that does not mean that people don't need to do anything. You still need
Right.
to work to bring the agents and copilots to a point where they generate code for you. So while this gives them the productivity gains, but you also to understand that there's also a time where all these people have also to learn and train themselves. So they are getting also spending that, whatever time is saved in exploring and learning and training. But for sure, these people are writing significantly less code today than was being done, let's say, even 6 months back.
Got it. Got it. And thank you for this. And last question, if I could squeeze in. Larger IT companies are saying that AI is going to be very deflationary for maintenance part of the business because as more and more automation increases, the actual number of people required are very less. While I understand that the same would not be true for us because we are not a software services company, we do have a lot of maintenance is what we understand. So do we also, as a thought leader, what would you say about the deflationary trend of AI coming in and affecting our business?
No. What you are saying is absolutely right. And for example, I have a friend. He, along with his team, has a mandate from a company where this large company has a team of about 7,000 people working for another very, very large company, global company. And he has been given a mandate to build AI automation, which will bring this number down from 7,000 to possibly 4,000, 5,000, something like this. Okay. So these things are happening. But the people who are relieved of doing this may end up, picking up something else and doing something else. In our case, however, you see, we are not, doing this maintenance type of routine maintenance type of a thing is not a primary business model for us. We do it in some cases, but what we do is deeply driven by our domain knowledge, our experience on the product. The products keep building up themselves. We are not in the business of saying that here is a system which is relatively static and we just need to maintain it.
Got it. Excellent, sir. That were all my questions. Thank you so much. And just wanted to compliment on the discipline with which you have not used up the cash and you're looking for the right opportunity. I wish you all the best and have a great time.
Thank you very much. Thank you, Umang.
Thank you, Umang. We'll take the next question from Akshay Bharade. Akshay, you can go ahead, please.
Yeah, hello, sir. Thanks for the opportunity.
Sure.
I attend almost all the con calls of Alletec and go through all the presentations. So very, very well written presentations and well presented. Thanks a lot for that. We are actually a main board company who is sitting in the SME segment actually. So I had a few questions regarding firstly on the revenue side. So the revenue kind of dropped from the same quarter last year, which was like 35 crore, around that figure to 28 crore this time, which is around like 20% drop as per the quarterly this thing, right? Am I right or am I wrong in reading that? 27.75. Yeah, sorry.
I don't think so. Sandeep,
because yeah, sorry, go ahead. Yeah.
Sandeep, you're on mute.
Sorry. Last year, the revenue was 34.93.
Yeah.
And,
same quarter.
Same quarter. And this year it is 34.74. I think you are looking the standalone revenue.
Yeah, standalone I'm looking at. Standalone has gone down significantly, is it? Oh, no, I'm maybe comparing with the...
Standalone is not
Standalone too has not gone down that much.
Actually, that's steady.
Yeah.
Okay. Well, so even if the rupee has depreciated a lot, and we have significant Americas present, like why have we not gained from that? Yeah.
Rupee change impact is coming in the other income aspect. If you see, the other income has increased from last quarter.
Okay. So that's
fluctuation is coming here.
Okay. But that's not significant, right? I mean, why I'm saying is even the very large organizations like Infi and TCS, which are not growing at all in the dollar terms, are gaining the benefit of the rupee, right? So like 6-7% gain there, but it's not seeing the same in our case.
Yeah, that's what I'm saying. Our difference of exchange is coming in the other income aspect. If you see that, last year it was 950 lakhs, and this year it is 11.71 crores.
Okay. So that means it's not a significant number for us. That's fine. My second question is, sir, when you say that macro impact was there, why do we see other, like even the mid-size IT companies like Persistent and Coforge growing sustainably with the sustainable profitability in their growth? Like, is it?
Yeah, very important question, and also important to understand. We have different businesses. If you look at, let's say, a Persistent, or you look at companies of that size and maybe some smaller companies, some of them have large project engagements, which means putting a very large number of people on assignments or projects with other large companies. these businesses, they have more wherewithal to take pressure of when things change. And, if they have budgeted for something for a year, and if something changes, these budgets would probably stand or hold. They wouldn't change very quickly. But one of our important drivers has been the work that we have been doing in the mid-sized companies. And these mid-sized companies are faster to react. The large companies take significantly longer to conclude a deal, and you can do it faster with a mid-sized company. But the mid-sized companies also react to external factors much more quickly than would these large companies. So this has been one of the primary reasons where, for example, if there's a manufacturer who sees that the cost of his inputs is dramatically changing because of tariffs, he gets paralyzed, and then he doesn't know what to do. Should he spend time, effort, money in finding alternate sources of his raw material purchase, or he should invest in technology? If somebody sees that he's not really sure how his logistics is going to get impacted, or how his customers are going to behave in a certain region, suddenly, their priorities would change. So when everything is going well, the small businesses, the mid-sized businesses are more agile, they are faster, and they have a high level of loyalty. But when things become a little tough, I think they also are the first to react. And that is where the larger businesses would take longer to react to the same situations. They also take longer to revert back, when things change, but they react faster when things become hard.
Right. Thank you, sir. That was a fantastic response. And so one last question.
Sure.
2 years ago, we had said our long-term target was like 1,000 crore revenue. Now we are saying midterm target is 500 crore. 2 years back, 2.5 years back, we said 1,000 crore, which is like now midterm is like long term for the 2 years back target. Why are we retracing? Like, are we? Yeah.
2 years back, we did not know what's going to happen in the last 14, 16 months.
Okay. Yeah. All right. No worries. So all good, sir. Thanks a lot for everything, and all the very best to all of you. Thank you.
Thank you very much. Thank you very much.
Cheers.
Appreciate all of you. Thank you.
Since there are no further questions, sir, would you like to give any closing comments?
Well, I guess I kind of said everything that had to be said. Just want to thank everyone who has been with us. I just want to say that as a company, we are extremely careful and cautious for the shareholders' wealth that we have. It's a great responsibility that we have on us, and we are going to continue working towards giving them return for the investments that they have made. And all of us as a team and other people who support us are going to continue to work in growing the organization.
Thank you, sir. Thank you to the management team for your valuable time, and thank you to all the participants for joining on. This brings us to the end of today's conference call. You all may disconnect now. Thank you.
Thank you very much.
Thank you.